Latest vehicle sales numbers show a drop in momentum from October to November, but year-on-year sales still up close to 30%. Joining me in studio are Andrew Kirby, he's Senior Vice President of Sales and Marketing at Toyota South Africa, Sydney Soundy, Managing Executive of Absa Vehicle and Asset Finance. Gents, thanks very much for coming in today. Sydney, passenger vehicles down almost 4% month on month, up 29% year-on-year. So overall the picture's looking pretty good, but the momentum is dropping off.
Yeah, I think as you say, you need to take the year-to-date figures into account to see the improvement that we've experienced from 2009. So I think it's a good story year-to-date.
Andrew, would you agree with that? Good story year-to-date, but perhaps sales slowing down ahead of the end of the year when people want to hold off for that 2011 licensed number?
I think when we look at new vehicle sales, we must take into account the different channels that they're sold through. Certainly if we look at dealer sales, which is of course the important driver, that was actually very strong in November. The reason that the total numbers
for passenger cars.
For passenger cars. The reason the numbers were slightly down was really because of a lower car rental volume. And we've seen car rental volumes being quite strong for the last 6 months. So it's not too untowards that it's backed off a little bit towards the end of the year.
Sydney, light commercial vehicles, that's buckies, up 12% month on month, 28% year on year, and that must be good because it looks like small businesses perhaps starting to get new vehicles.
Yeah, it seems as if small businesses are starting to get up to the levels that are acceptable from an economic activity point of view. Obviously, that business is low in terms of the lag effect of the uptick in the economy, but we're seeing that now.
How are you seeing the overall picture for 2010, Andrew, and what would you expect going into 2011 from here? Because obviously we're coming off of a low base. We did have a big fall last year. Do you think things are going to start levelling out as we go into 2011?
2010's been encouraging. You know, it's been fairly flat since or post the World Cup. Yes, we actually had 3 years of decline, so the market's been severely hit, but we've seen some good strength coming through. And if we look at the last 3 months, we've seen some very stable sales coming through month on month. And we think that we are in for moderate growth next year of between 5 and 8%, which I think will lead us to some far more substantial, or let's say sustainable volumes for the industry.
Do those figures tally with what you're seeing, Sydney?
Well, yes. Our view, though, is that growth will be approximately 6.5% in the next year. So a little bit more optimistic than Andrew, but it's around those ballpark figures, would say. Given that, as Andrew indicates, I mean, 2009 was a low year, and 2010 picked up very well. So we don't think that we'll get the same sort of growth into the next year.
What's our applications for finance looking like at the moment, Sydney?
If you compare, from our side, if you compare November with October, we had 11% growth in applications. So we're seeing people getting much more confident.
And good quality applications?
Quality remains the same. So I would say that it would then be good, because if you increase the numbers at the same quality levels, then it's a good indication.
Andrew, is this still a battle for some customers to get finance for their vehicles? Is it becoming easier?
It's still a struggle point. I think the availability of customers with good credit ratings is still a struggle. But what we have seen is that with the aging vehicle car park, due to this past 3 year slowdown, we do have some pent-up demand that is starting to come through. The lower interest rates and obviously the recent reduction has definitely helped as well. But we must also remember that we had a strike which severely impacted on supply. That's eased up. We've had some catchback on those missed volumes. And so I think that's also driving some of the forward potential.
You do point out in the commentary today that some of the more popular models are still very scarce because of those strikes a few months ago.
Yes, if you look at the areas where we've seen growth, it's obviously in the affordable to entry-level priced vehicles, and that's where the popular models play their part. And we see that there's still a sense of lack in stock. As Andrew indicates, it will take some time before all the clawback is actually gotten to.
What are the models in demand at Toyota? Is it also those entry-level vehicles?
Yes, we've seen the entry-level segment is about 42% of the total passenger car segment, and that buying down trend I think will continue. So we're certainly seeing that strengthening, but what's interesting is SUVs are still showing significant growth.
4x4s.
4x4s. And I think the availability of more affordable 4x4s is driving that trend as well.
And how about Toyota's position in the market? Because you've generally been the more dominant player within the market, followed I think by Volkswagen. Have you maintained that over the course of the year?
No, we haven't. We actually lost some market share, specifically in the entry-level segment where we didn't really play very competitively. Just recently we've launched a product called the Yaris Zen, which has helped us, and so we've seen a nice improvement in our share towards the end of the year.
Of course, interest rates have now been docked by 650 basis points since I think December 2008, so I think another 50 basis points since you last came in. Is that making cars more affordable and financing more affordable for consumers?
Generally it is. If you look at the debt to income ratio, it's still at high levels, but the servicing debt costs are actually lower given the decrease in the interest rates. So we see individuals starting to get affordability, but also given the changes in the period in which finance can be made, we're also seeing a lot of demand for contracts beyond 60 months. So that gives... Are
you approving those contracts?
We're not improving all of them. So we, again, on the basis of individual assessment, we're looking at the risk involved. We're not improving all of that, approving all of that.
Of course, we've had the Reserve Bank governor saying there's very little room to move interest rates lower. So is this a time when people should be looking at fixed rates? Have you had applications for more fixed rate terms?
We've seen growth in demand for fixed rates. In fact, we think that perhaps this is the right way to go for consumers. And given that the interest rates have gone down, the savings that consumers would make as a result of fixing now, we think that it should be channeled towards ensuring that we don't have underinsured vehicles or uninsured vehicles. I think it's a much more responsible way for consumers to look at it now. If they fix now and have the repayment in terms of understanding what the repayments will be over a period of time, I think that gives them a good opportunity to use the savings for insurance purposes.
Well, what's your view on that, Andrew? And also, do you think people are going to rush out and buy Toyota for Christmas?
It's always interesting to watch November and December, and we definitely see particular segments improve prior to Christmas, particularly SUVs. Interestingly enough, everybody wants to drive their 4x4.
How do you get that in a stocking?
So everybody wants to drive their 4x4 just before Christmas, and that trend seems to be repeated this year. In terms of the period of financing, obviously we are a little bit concerned. We see an increase in 72-month financing, which obviously creates a very long cycle. It also puts customers in a position where it takes them a long time before they actually own more than they owe. Yeah. And that obviously is a concern for us. But that trend seems to be continuing, and I understand the affordability is pushing that trend.